And welcome back. Thank you so much for joining me in today's video. I'm going to make a very comprehensive view regarding our housing market, early indications of home buying demand, and frankly, early indications of our housing market right now. What we're seeing right now, that's an early indication of our housing market. So what lies ahead in the weeks and months ahead. So in today's video, I'm going to be sharing a lot of new trends we're seeing right now, but also more or less a recap as well regarding a lot of trends we've been seeing over the past couple of weeks. I'm also going to be sharing a detailed list of housing market forecasts from a lot of different organizations as well, what their predictions are for 2023. And lastly, I'm going to be sharing some trends regarding home sold prices, which is a lagging indication of what we're seeing right now regarding home prices, because there's some very interesting trends compared to January 1st of this year, and also the trends we've been seeing compared to 2019. So normally in today's video, I make a update regarding Redfin's housing market update. They post a weekly housing market update on their website, and I normally share that with you guys, but after reading their analysis, I probably disagree with them regarding the vast majority of what they had to say here. So in today's video, I'm actually not going to be sharing their analysis, but I am going to be sharing a lot of early indications of home buying demand, and also some things that Redfin has to say in their update that was just posted on Friday, which is November 4th. So let's first talk about what their deputy chief economist for Redfin had to say, because here's some things I actually do agree with him regarding that. And he says here, we're deep in a market that is coping with the pains of higher mortgage rates. And by the way, I have an update for you guys regarding rates here in just a little bit. Rates may take longer to come down than was previously expected, which means housing trends could continue to worsen as the economy adjusts to higher rates. And also, it may take some time for the smoke to clear to see where things play out next year. So let's talk about rates right now. So the 10-year Treasury at the time of this video, which is 4:23 p.m. Eastern Standard Time on Friday. Look at this, the yield's at 4.171%, up by about 4 basis points from yesterday, which was on Thursday. So because the Treasury yield has been increasing, so have rates. So as of today, which again is the 4th of November, average rates for 30-year fixed rate mortgages is averaging at 7.49%, of course, with people with exceptional credit. So 7.49%. Also, according to the Mortgage News Daily, as of today, let me just refresh this, make sure it hasn't changed. The 30-year fix is at 7.29%. The high we saw over the past 12 months was 7.37%, and the low was 3.07%. Also, average rates for a 15-year fix is at 6.75%, which, by the way, is a 12-month high according to the Mortgage News Daily. Also, for the FHA and VA loans, is in the range of 6.84% and 6.89%. Again, that's averages across the nation. On top of that, compared to 1 year ago, rates for an average 30-year fix were 3.12%. So in other words, over the past 12 months, rates have increased by 417 basis points, or 4.17 percentage points. And on top of that, as I mentioned in my previous video, rates have been above 7% for about a month right now. So it's absolutely insane how high rates are. So in regards to that, have a look at this. This is on Freddie Mac's website right here. This is actually a really good website if you want to look at average rates over time. So actually provide average rates by month and also for the averages for the year. So the reason why I want to share this with you guys is that rates right now at about 7.2% approximately is so much higher compared to 2021 and 2020. Because look at these averages. In 2020, the average rate was 3.11%. Then it fell in 2021 to 2.96%. So in other words, over the past 2 years, well, I should say in 2020 and 2021, the average 30-year fix was around 3%. So we had 2 years where rates were averaging about 3%, and now they're at 7%. I've been over 7% for 30 days now, or over 30 days now. So that's going to be really impacting our housing market. It already is impacting our housing market, but we're going to start to see the true impacts regarding these high rates in approximately 1 to 2 months from now, when we start seeing a huge correction in our housing market, in my personal opinion, given the fact that rates are so high right now. So let's talk about some early indications of home buying demand, what we're seeing right now that could be impacting our housing market 1 to 2 months from now. I'd rather look at that versus looking at stats regarding houses actually sold, because that's really looking at in the rearview mirror. I want to give you guys a heads up regarding what is potentially lying ahead in the months ahead, with a lack of a better word. Anyways, here's according to the National Association of Realtors, they have what's called their foot traffic report, which more or less shows us the number of home showings across the United States. In other words, home showings by real estate agents showing their home buyers houses for sale. So home showings, according to the National Association of Realtors, and by the way, Central Lock is a company that makes lockbox systems that realtors access when they go to houses for sale. They enter their code, they get the key out of the lockbox. So they track home showings that way. So according to them, for September, home showings are down by 19% on a year-over-year basis. So down by 19% compared to September 2021. We're also seeing huge decreases across all regions as well, because look at the Northeast, declining by 54% on a year-over-year basis. The Midwest falling by 35%, the West falling by 17%, and the South down by 6%. So that's the number of real estate showings in September. Let's have a look what's happening right now. This is on showingtime.com. This is pretty eye-opening. Take a look at this. So for the 7 days ended November 3rd, we have 31.2% fewer real estate showings across North America compared to the first week of 2022. So we have 31% fewer real estate showings compared to the first week of the year, which is January, which is absolutely insane, because in January, it tends to be a very slow time in our housing market. So it's absolutely eye-opening to see we have 31% fewer real estate showings compared to the start of this year. Absolutely insane. Compare this to 2021, there was a 0.5% increase compared to the first week of 2021. And back in 2020, a 5.4% increase to start that year. And also, as I mentioned in previous videos here, we've been seeing fewer real estate showings across North America compared to January 1st, really, ever since really the middle of July of this year. And actually, I'm really interested to see what the rest of the year looks like, because we tend to see a big decrease around Thanksgiving and, of course, the holidays in December as well. So we should see that this year, of course, as well. But in my opinion, we're going to be seeing an even bigger decrease compared to the past couple of years. So stay tuned for that. So here's another indication of home buying demand, kind of loosely related here. This is on Google Trends. These are for people searching for homes for sale on Google. So this is over the past 12 months in the US. So right now, the interest over time right now is an index of 67. Compare that to 1 year ago, it was 91. So as you can see right here, ever since really the first part or the first week of August, the number of people searching for homes for sale on Google has been declining. And interesting enough, have a look at this, because people searching for housing crash on Google is at least a 12-month high right now. People are obviously interested in what's happening with our housing market, given all these headwinds that our market's really facing right now. Also, this is another early indication of home buying demand as well, which of course is pending home sales. And pending home sale, of course, is when a home seller accepts an offer from a home buyer. That becomes a pending home sale. So according to the National Association of Realtors, they reported that pendings decreased by 10.2% compared to the previous month. But again, by my analysis here, pending home sales decreased by 31% on a year-over-year basis. Actually, the National Association of Realtors did report that, down by 31% on a year-over-year basis though. But based on my own analysis here, I made a separate video regarding this about a week ago. So excluding April 2020, which of course is the onset of pandemic, we're at the lowest levels of pending home sales since June of 2010 right now. And on top of that, pending home sales have now dropped for the fourth consecutive month as well. The significance regarding this big decrease of pending home sales, again down by 31% on a year-over-year basis, is that pending home sales that we see right now are impacting closed home sales in 1 to 2 months from now. So because pending home sales have been decreasing and again down to the slowest levels since June of 2010, this should cause a decrease of home sales for the remainder of the year. And speaking of pending home sales, have a look at this, because this is also based on a report I made for you guys a couple of weeks ago. This is according to the U.S. Census Bureau regarding brand new home sales, new home construction for single family houses across the United States. And the U.S. Census Bureau defines a new home sale as when a contract is being signed between the home buyer and the home builder, or a deposit is taken. So this is really acting like a pending home sale regarding our housing market right now. Again, an early indication of home buying demand. So as I report to you guys, new home sales have gone down in 7 out of the last 9 months in the US. Down by 10.9% from 1 month ago, and down by 17.6% on a year-over-year basis. On top of that, as of September, there's 462,000 brand new single-family homes that are for sale right now. And these are the highest levels we've seen since March of 2008. But wait, there's more, because the month supply of brand new houses in the US is at 9.2 months right now. This is a 50.8% increase on a year-over-year basis. So that's probably a lot of information to digest. So let me give you a brief summary right now. So rates right now at 7.29% or 7.3% is very, very close to highs we saw back in December of 2000. So the rates we have right now are more or less a 22-year high, very, very close to a 22-year high. That's what we're seeing right now regarding rates. We're also seeing a decrease of home showings, again, down by 19% in September. And again, right now, for the week ended November 3rd, down by 31.2% compared to January 1st of this year, which is absolutely insane. Obviously, fewer people are searching for houses for sale. There's a big increase of people searching for housing crash on Google. And of course, we're seeing a huge decrease of pending home sales, again, down to the lowest levels since June of 2010, which is absolutely insane. And obviously, we're seeing a decrease of brand new home sales across the United States as well. And because of all these headwinds that home buyers are facing right now, and a slowdown in general of our housing market, a lot of organizations and companies have been releasing their forecast for 2023 with some grim numbers, or actually some mixed numbers, I should say. This is according to the California Association of Realtors. Their forecast for next year, which of course is 2023, they're calling for the median sold price in California to decrease by 8.8% next year. But look at this. They're calling for their median sold price in 2023 to be $758,600. Compare this to 2022, it was $831,000. Also, 2021, it was just under $787,000. So in other words, the California Association of Realtors is calling for home prices to dip below 2021's levels. 758 versus 786,000 back in 2021. So they're calling for home prices decreased by 8% from 2022, but dipping below 2021's levels. Also look at this, because the main reason for this decrease, or their forecast for decreases in home prices, is due to a lack of housing affordability, like I've been talking about on this channel for probably over a year now, right? This is what they're talking about here, though. This is the percent of households who can't afford to buy a median price home in California. For 2021, that was 26%. 2020, it was 32%. So approximately 32% of households here in California could afford to buy a median price home here in California. But their forecast next year is only 18%. So they're calling for next year in 2023 that only 18% of households here can afford to buy a median price home in the state. And obviously, this is a huge, huge issue, not only in California, but frankly, across the United States as well. Also, the forecast for Fannie Mae is this right here. They're calling for home prices to decrease by only 1.5% in 2023. Technically, it's based on their HPI, which is their home price index. So that's based on home prices, of course. They're calling for their HPI to decrease by 1.5% in 2023. Let me know what you guys think about that. Also, according to Freddie Mac, they're calling for home prices to decrease by 0.2% next year. And also, according to Zillow, they just announced this on the 19th of October. They're projecting that home values are going to remain flat through the end of the year. That's 2022. And for home values to increase by 1.3% for the 12 months ended September of 2023. And according to CoreLogic, they're forecasting for home prices to increase by 3.9% over the next 12 months through September 2023. And as a side note, as far as I know, Zillow as well as CoreLogic do not provide their forecast for the entire year of 2023. Instead, they share their latest housing market predictions over the next 12 months, and their latest forecast is actually through September of 2023. So I hope you guys appreciate this summary regarding forecasts by company, as well as a lot of early indications of home buying demand. But let's talk about home prices right now, which is again a lagging indication because there's some very interesting trends we're seeing right now. So this is what I'm going to be sharing with you guys right now, very briefly, and then we'll kind of wrap this video up. And by the way, this is not shared, or actually the stats I'm sharing right now was not provided in Redfin's analysis in their latest housing market forecast here. But this is what I found out. So right now, the median sold price is $361,000. The peak was right here, which is more or less the 4 weeks ended June 19th, when the median sold price was $392,000. So in other words, by my dumb math, the median sold price, or let's just call it home prices. I know it's median sold prices, but let's call it home prices. Home prices decreased by 8%. So home prices have decreased by 8% since more or less May and June of this year, compared to what we're seeing right now, which is more or less the end of October. Now, when you compare this to 2019, which is the line right here, home prices actually decreased from $275,000, which is more or less right here, down to $269,000, which is right there. So by my dumb math, home prices during that time frame decreased by 2% compared to an 8% decrease we're seeing this year. So in other words, our housing market slowing down much, much faster this year compared to 2019, which is obviously pre-COVID. Also on top of that, again, the median sold price at $361,000. Compare this to January 1st, it was $351,000. So home prices have only increased by 3% year to date. And because home prices have only increased by 3% year to date, and also we're not seeing the true impacts regarding rates at 7%, I'm actually really curious to see what December 31st looks like, because we could potentially be looking at negative year-over-year price growth in the US. So if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.